Welcome to 19th session of Management Accounting, 5th semester BBA, Bengaluru North University. In this session, we are going to solve the problem on ratio analysis when profit and loss account and balance sheet is given in the problem. In the previous class also, we have solved the one problem on the ratio analysis when profit and loss account and balance sheet information was given. Next, the main objective of this chapter is to familiarize the students with the ratio analysis as a tool for financial analysis. Next, the main session outcome is that the students will be able to compute various ratios based on a given financial statement. Here, the balance sheet is given. This is the problem. You have been furnished with the financial information of AB Limited and the balance sheet is given as on 31st March 2020 and liability side equity share capital is there, retained earnings, sundry creditors, bills payable and other current liabilities is given. Then asset side. Debtors is given inner column and minus provision and in the outer column actual debtors amount is given. Then stock, plant and machinery, prepaid, insurance, cash and land and building is given. Next, statement of profit is also given. Here in the statement of profit, first is sales is given minus cost of goods sold. So we are getting gross profit minus operating expenses. We are getting EBIT or it is also called as operating profit. In that we have to deduct the tax at the rate of 38.5%. At the end, we are getting net profit or profit after tax. Then, sundry data and stock at the beginning were rupees 3 lakh and 4 lakh respectively. So, in the previous problem, opening debtors and opening stock, opening debtors was not given. But in this problem, opening debtor and also opening stock is given. With the help of this, we can able to calculate the average debtor and average stock. Then we have to determine current ratio, stock turnover ratio, gross profit ratio, EPS means earning per share, then acid test ratio, debtors turnover ratio and net profit ratio we have to calculate. Next, we are going to solve the problem. The first ratio what we are going to calculate is current ratio. The formula for current ratio is current assets divided by current liability. First we have to calculate current assets and current liabilities separately because total current assets amount is not given and total current liabilities amount is also not given. So what are the current assets are there in the problem, that is in the balance sheet we have to see. There are like cash, debtors, stock and prepaid expenses. These are all the current assets are given in the balance sheet. Now if you are going to add all these things, we are getting current assets of rupees 9,72,000. Then we have to identify what are the current liabilities that is given in the balance sheet. So in the balance sheet it is given liability side creditors, bills payable and other current liabilities. These are the current liabilities. So if we are going to add all these three items means we are getting current liabilities of rupees 3,24,000. After calculating current assets and current liabilities, we can calculate the current ratio. Now the current ratio is 3:1. Next, we have to calculate the acid test ratio, or it is also called as quick ratio or liquid ratio. The formula for this is quick assets divided by quick liabilities. We have to calculate the quick assets. What is the formula for this quick assets is current assets minus stock minus prepaid expenses. Here current assets already we have calculated. From this we have to deduct the stock and prepaid expenses. Now the quick assets is rupees 4,80,000. Then there is no need to calculate the quick liabilities. We can treat the current liabilities is also a quick liabilities because in this problem bank overdraft is not given. If it is given, we can calculate the quick liabilities, that is current liabilities minus bank overdraft. Since it is not given, we can treat the current liability as a quick liability. Now acid test ratio is equal to 4,80,000 divided by 3,24,000, that is 1.48 is to 1. Then we have to calculate the stock turnover ratio. The formula for stock turnover ratio is cost of goods sold divided by average stock. In the problem directly it is given, that is in the statement of profit, cost of goods sold is given. So there is no need to calculate it again. Then average stock we have to calculate. In the balance sheet closing stock is given and in the adjustment opening stock is given. It is 4 lakhs divided plus 4 lakh 80,000 divided by 2. The average stock is 4 lakh 40,000. Now the stock turnover ratio is 7 times. Next, calculation of debtor turnover ratio. The formula for debtor turnover ratio is credit sales divided by average debtor. Here, credit sales, it is not given, sales is given, we can treat it as sales only or credit sales. Then average debtor, closing debtor is given in the balance sheet and opening debtor it is given in the adjustment. Okay, average debtors is equal to 3 lakh plus 3 lakh 20,000 divided by 2, that is 3 lakh 10,000. Now debtor turnover ratio, the final answer is 12.9 times. Next, we have to calculate the gross profit ratio. The formula for gross profit ratio is gross profit divided by net sales into 100. Here gross profit is also given and sales is also given. If we are going to substitute, we are getting gross profit is 23%. Always this gross profit, net profit, operating profit ratio and expenses ratio, these are all expressed in terms of percentage. Next, calculation of net profit ratio. The formula for net profit ratio is net profit divided by net sales into 100. Here net profit is given in the problem, that is in the statement of profit, and net sales is also given. If you are substituting, we are getting net profit ratio is 6%. As I told, this net profit ratio is also expressed in percentage. And the last one is calculation of EPS. Here EPS means earnings per share. The formula for this is profit available to equity shareholders divided by number of equity shares. This profit available to equity shareholders is given in the statement of profit and this number of equity shares that is given in the balance sheet liability side. So the final answer, that is earnings per share, is rupees 12 per share. So again I am telling, if we want to solve the problem on ratio analysis means compulsory, it is in that you have to remember all the formula. Thank you, Nadal.